Good afternoon. Well, Transaction Capital, the owner of WeBuyCars and SA vehicle lender SA Taxi, reported their interim earnings this morning, also declaring an interim dividend of 33 cents per share. To talk to us about the numbers, we are joined by David Hurwitz, who is the CEO of Transaction Capital. David, thank you so much for your time. Let's reflect back on the period that was for Transaction Capital. What was some of the highlights from an operational point of view?
Thanks for having me on the show. First of all, we're very, very pleased with our results. Growing headline earnings per share by 28% and headline earnings by 38%, I think is a super result. I think two major highlights for us. The first one is that WeBuyCars continues to grow at a very phenomenal rate. We grew earnings in that business by about 58%. And of course, we consolidated a greater component of the earnings for this half. Last half, we consolidated just less than 50%, and this half we consolidated just less than 75%. So we had a double benefit there of high earnings growth in the underlying business, together with a greater consolidation of the earnings. The second thing I think which is really exciting was our Transaction Capital Risk Services business, which grew earnings at 25%. And what we've really done there, first of all, is we've expanded the type of services that we sell. Previously, we were very focused on selling collection services to businesses that are consumer-facing, people like banks, retailers, municipalities, telcos, etc. And we've done two things. We've broadened the type of services that we sell to not just be collection services, but other customer engagement services, things like sales, onboarding, customer care, customer complaint resolution, etc. And that's working really nicely. And we're now doing this in other countries. So using our South African infrastructure to provide these services to consumer-facing businesses offshore, Australia, the UK, where we already have a very strong client base, and generating pound or Aussie dollar revenues off a South African rand denominated cost base. So we're very, very excited about that, and that really is working very well. And all of this should sustain our growth rates.
Yeah. What is your sense of the used car market, and what are some of the structural shifts you're seeing on that front?
I think there are a few structural shifts. We always invest in businesses which are well placed in our environment from a structural perspective. The first thing is that if you take a look at the commuter population in South Africa, and if you measure this from 2013 through to 2020, what you'll see is that the percentage of the population that moved in private vehicles has increased from just under 14% to be just under 19%. So more and more people are shifting out of public transport, particularly bus and train, and moving into first-time vehicle ownership. And if you're going to buy a car for the first time, it's probably going to be a second-hand car, probably an older second-hand car, an area where we have real competency at WeBuyCars. The other thing is just generally, we've seen new vehicle sales contract for the last 10 years, used vehicle sales grow for the last 10 years. And I think that's as consumers are under affordability constraints, they trade down from a new car to a used car. So that all bodes very well for WeBuyCars.
Right. We had the recent KZN floods, impacting the Toyota operations. What's the impact for Transaction Capital at this point?
Yeah, so the main impact there is really for SA Taxi. The main product that we would be financing and the main product going into the minibus taxi industry is the Toyota minibus van. That line has been disrupted. It could be a disruption of anything from 2 months, maybe longer, to 4 or 5 months. Hopefully, we hope for the shortest period possible. During this period, obviously, supply of new cars will be stopped, and we would have to be reliant on financing our other product, which is our pre-owned vehicle. So we'll have to supplement pre-owned sale and finance of pre-owned minibus taxis with new, and that will impact our book growth. So that's the main impact. We hope that it will be short-lived. And that the plant will be up and running hopefully in the next 2 months, but realistically probably 3 or 4 months out.
Before I let you go, what are some of the opportunities to accelerate earnings growth in the short to medium term?
So first of all, despite this disruption to the Toyota plant, I think transaction capital can still grow earnings in the 20s and hopefully the mid-20s, quite frankly. I think some of the opportunities is this international expansion in transaction capital risk services by using our local infrastructure to serve international clients, which is all organic. We don't have to buy anything offshore. And certainly in We Buy Cars, I think the big opportunity is for us to provide our own financial and insurance products into our base, together with selling a car.
Right.
And that's something which is largely untapped.
David, let's leave it there. Thank you so much for your time. That is David Hurwitz, who is the CEO of Transaction Capital. Moving on to the markets picture for now as we look at what's going on from the Asian side. A bit of a mixed performance as investors continue to assess the global economic outlook as well as digest some of the hawkish comments coming out of Fed Chair Jerome Powell. And as a result, we saw Chinese markets whipsaw throughout trade for that particular period. Japanese markets are up higher by 0.9%, and Hang Seng Index fractionally lower. But to talk to us about the latest in the markets, we are joined by Patrice Rousseau, who is the Chief Investment Officer at Ashburton. Patrice, your sense of the JSE performance right now, given the Asian and European markets, and also what we're seeing when it comes to US futures?
Yes, Anastasia, and good afternoon to you and your viewers. So we had a positive start to the JSE this morning, only to give up all the gains at lunchtime, with the top 40 dipping into negative territory. As you mentioned, I think some of the words of Jerome Powell, the Fed chair, overnight on action to control US inflation, which is at 40-year highs, spooking the market slightly. He went as far as talking about having to see unemployment increase in the US in order to cool down the economy, which obviously markets didn't take too kindly to. And then in Asia, it's been the Tencent results, which have been slightly disappointing and has initially drove the Nasdaq share price lower.
Right. So yesterday we had Pick n Pay releasing their results, but at the same time announcing a new strategy, one of which will entail expanding discount retailer Boxer. And depending on which retail analyst you speak to, many are saying it's been long overdue, this new strategy. What did you make of it?
Yes, I think a very good update and strategic direction for Pick n Pay. I think Pick n Pay has always been a very solid middle market brand, but have lost ground to a more value-focused offering from ShopRite. So they now want to launch something in between the Boxer brand and the Pick n Pay brand to really offer better value to their customers. And to add to that, they're talking about cutting costs to the tune of 3 billion. And then, as you mentioned already, I think a big drive will be in e-commerce, and the relationship with Takealot should help enhance what they already have in terms of their online e-commerce service that they have currently.
So one of the opportunities they are seeing is in the low-income consumers. So basically, they're seeing it as the largest and fastest growing market. On that note, then, are you finding opportunities then when it comes to the SA food retailers? Are they worth looking at in an environment of high inflation?
Yes, definitely. I think, as you mentioned, these are the one part of industry with the ability to pass on price increases, while customers will look to cut back and move to value. The food basket it tends to be fairly inelastic, and that's the reason you see Pick n Pay thinking in this environment to come up with a more value offering. And the ShopRite group also has done very well, because they cover the whole spectrum from Checkers at the top end to the ShopRite brand with very much a low price type of strategy. So this is the one sector we believe is quite defensive, but Pick n Pay especially we find very attractive because there's a bit of a turnaround story under the new CEO.
Let's talk about the dollar. I mean, you're seeing it appreciate against almost, every G10 currency. You look at the dollar index at levels not seen at least in 20 years. Is the dollar's performance at this point unstoppable?
Yes, I mean, it's a very good question. The dollar's been strong. It's still the world reserve currency. The Fed has been quite aggressive in terms of hiking rates, the 50 basis points that we've seen, and maybe 2 further hikes over the next 2 months of 50 basis points has meant that we've seen funds flow back into the US dollar, and it's always a relative gain. Versus the euro or the yen, the dollar and the US economy appears to be the stronger place to be, which supports the greenback. And the Fed being as aggressive as it is, I think has led capital to flow to the one area where it seemed to be able to eke more returns.
On that note, then, how are you digesting the lackluster economic outlooks, whether you're looking at the US or China?
Yeah, China, I mean, a very good point, has been extremely disappointing. They've locked down 60% of their economy, really a zero tolerance approach to COVID, which has really impacted not just the internal domestic economy, but also supply chains globally, because they're not really letting goods in or out of the country. So there's concerns that they might miss their 5% target for the year unless they come up with a very drastic capital investment program from the government, which we've yet to hear about. And then Europe has lagged. I think compared to the US, Europe is lagging in terms of economic growth, impacted by the Ukraine-Russia war, and also by the high inflationary impact of having less trade relations with Russia and the high gas prices and high wheat prices.
All right, Patrice, let's leave it there. Thank you so much for your time this afternoon. And of course, as he mentioned, a lot of the conversation has been around CPI outlooks, whether we're looking at the Bank of England or Japan CPI figures coming out later in this week. And then tomorrow, we've got our interest rate decision, and I'll be giving you that coverage, so you can stay tuned for that between 3 and 4 p.m. That is it from me. We're going to take a quick break, and when we come back, we'll have more news with Nompumelelo Sizeba, so stay tuned for that.